Welcome to a System D fundamentals briefing on advanced micro devices, ticker AMD. This is a quick system-style read of the company's most recent SEC filing, how it's valued, how it earns, and what the market is betting on. All figures come straight from SEC Edgar. Any single financial ratio can mislead. A high PE alone might mean hype, or it might mean real growth priced in. AMD is a great case study because its numbers pull in different directions: near zero debt next to a premium valuation, and strong gross margin next to a thinner operating margin. Read together, they tell a coherent story. AMD trades at $484.64 a share, a market cap of nearly $790 billion. That gives a trailing PE of 182 times earnings and a price over 12 times book value per share. In short, the market is valuing AMD almost entirely on future earnings power, not today's balance sheet. Gross margin sits near 50%, strong for a fabless chipmaker, but operating margin drops to under 11% once R&D and go-to-market spend are factored in. AMD is investing heavily in next-gen silicon. Interestingly, net margin at 12.5% is actually higher than operating margin, suggesting a benefit from items below the operating line. Worth digging into further. Return on equity sits at 6.7%, return on assets at 5.4%. Close together because AMD carries almost no debt. Without leverage amplifying returns, this performance is coming purely from operations, not financial engineering. On leverage, debt to equity is essentially zero, with just $1 million of long-term debt against nearly $80 billion in total assets. On liquidity, $5.6 billion in cash gives AMD real flexibility to fund R&D or acquisitions without touching the debt markets. Strong gross margins funding heavy reinvestment, a conservative, debt-free capital structure, and a stock price that already assumes AMD becomes meaningfully more profitable than it is today. That 182 times multiple isn't a statement about today. It's a forecast. It implies the market expects sustained, double-digit earnings growth for years to come, well above the sector's historical average. 5 takeaways for reading any filing like this. A multiple is a forecast, not a fact. Compare ROE to ROA to spot leverage. Margins reveal the cost story. Zero debt is a strategic choice, and cash on hand is optionality. This briefing is educational only, not investment advice. Every figure traces back to SEC Edgar, CIK 0000 0024888. Thanks for reading the filing with us.